Hello traders, my name is Grega Horat and welcome to a new video update in which we will take a look on dollar index, Aussie dollar against the US dollar, and of course after a long time we will take a look on the S&P 500. So on the dollar index weekly chart we identified end of a wave B contracting triangle exactly at this point around 81.30. Which was a low of a wave E final leg within this huge complex triangle. And the reason why I suspect that this triangle is complete is of course this recent break higher through this trend line connected from these 2010 highs, and we have seen also a spike above this wave B swing high. So I think this is a very nice and first indication for further gains in wave C. So ideally we will see a strong push higher on the US dollar index in 5-wave movement within wave C. On the daily chart we identified this pullback, if you recall, 2 weeks back as a corrective movement in wave E. Notice that this wave E perfectly found the support at these previous swing highs, and you know, when the resistance is broken, then this resistance will in many cases became a support in the uptrend. Okay, so this has unfolded very nicely, especially because this was very nice wave C to wave A equality reversal actually from this 81.30 level. So from here we can see a nice impulsive structures. If you recall, I identified low and end of this wave E right here when we were able to count 5 waves up from this level. So we know that impulses, which means 5-wave structures, are showing direction of a primary trend or at least temporary change in trend. Okay, so because previously we had 3 waves down, we of course knew at that time that this market should continue higher because of this 5-wave rally. So we called end of a wave E here. We have seen after that a very nice 3-wave pullback in wave 2, and now very sharp and extended move. Notice that this move is much bigger compared to this move, so I think this move represents a wave 3, third wave price action of a new impulsive 5-wave rally. We can also count 5 sub-waves within this wave 3, which is needed for this type of a price action. So ideally this market is now reversing lower. We know that after every 5 waves correction follows. So this wave 5 completed the red wave 3 right here, and we are now trading lower in a deeper pullback in a red wave 4. Also it's very interesting here is that this push higher and extension in wave 3 occurred after a breakout of this upper base channel resistance line. Okay, so this breakout at that time was our confirmation for this bullish run, for this impulsive recovery. So if we are on the right track, then we know that this current wave 4 pullback will look for a support somewhere around these base channel lines. Okay, so this is our upper base channel line and this is our mid base channel line. Okay, at the same time, based on Elliott wave guidelines, we also need to respect the regions of a wave 4 of one lesser degree, which comes in at this wave 4. Also keep in mind that wave 4 will usually retrace 38.2% compared to wave 3, okay, which in our case also comes here around this wave 4 zone. At the same time, we know that wave 2 in some cases will travel very similar distance compared to this wave. Actually wave 4 will travel very similar distance compared to wave 2. Okay, so in our case that will again come in around this zone. So this is a very nice region actually, for let's say from 83.30 to 83.50 for a potential completion of a wave 4. But also we need to be aware that wave 4 is corrective leg. Okay, so before we can continue to look higher, we know that we need 3 waves of retracement. For now I can see only one leg down. Okay, so this is probably only wave A, and we will see then a wave B pullback in the next few days, and then another sell-off in wave C, which will ideally find a support somewhere around these levels, or 83.30 to 83.50, and then we will of course look for an uptrend continuation. So from this larger perspective, we will stay bullish on the US dollar index as long the price will trade above this critical level, because we know that wave 4 must not trade into a territory of a wave 1 or wave 2. Okay, so this wave 4 must not fall below these levels, otherwise we will know that wave count is invalid, and of course we will have to adjust our prediction. And here on this technical chart, I'm also observing and keeping an eye on this 50 period moving average. This is the 4-hour chart, where I hope that this 50 period moving average will also react as a support. We have seen a sharp move to the upside here, then a little bit sideways price action, and now this sharp strong rally. I think it's a wave 3, which is above the 50 period moving average. It means that trend is bullish. Okay, so of course if I'm bullish, I want that price will stay above this moving average. In such case, I want to see wave 4 low around this 50 period moving average, okay, which again comes in at very similar levels compared to this Fibonacci and wave count predictions. Okay, and now let's take a look on the Aussie dollar. Aussie dollar, as you know, we were tracking actually 2 wave counts on the Aussie dollar weekly charts. Our first primary wave count a few weeks back was this one, when we were anticipating just a little bit deeper but much slower price action or pullback within this wave E, which is final leg of a triangle, but because of a very strong move to the downside, which definitely has a personality more of an impulsive wave rather than corrective, and because the prices also extended and closed on a weekly basis below this trend line, I think that we need to respect this type of a bearish price action and go with the current sentiment. Okay, so I will definitely not hoping for any reversal. I will rather stay with the trend and will label the wave count that fits best into the current wave structure, okay, or the price action. So for now I'm tracking this wave count as my primary wave count. We have seen double trendline breakout. First was here a few weeks back, actually in mid-April, and now the second breakout through the trendline has occurred last week. So I think this latest breakout is very important for further weakness in wave C. So if my counts are correct, then we will see more downside in impulsive fashion in wave C, definitely beneath this wave A swing low. Okay, so for now I'm bearish on Aussie dollar, and only sharp reversal, let's say back above this wave, this swing high, would require a new outlook. So for now I will stick to the bearish plan, which is with the discount. On a daily chart, notice that fall from this peak, which is this high here, is for now in 3 waves. Okay, this was wave 1, wave 2, and now this is a third leg down. But more importantly, notice that recent price has extended well beneath this base channel. Okay, so this was actually a breakout into a wave 3. We know that in impulsive trends, okay, you will typically see a strong move in wave 3, in wave 3 sell-off. In wave 3, which is the strongest move compared to waves 1 and waves 5, you will typically see an increase in volume, increase in momentum, very sharp candlesticks, one directional movements, and this is typically a third wave price action. That's why you see a break out of this base channel. In our case, of course, this is to the downside because we are tracking a bear market here. So I think that this market is now in an impulsive sell-off here. Maybe now we are in the middle of a fourth wave for subways, with subway, which is part of this wave 3. So I will be looking lower, and any pullbacks of course should prove corrective that will trying to reverse from this base channel. So for now I'm bearish on Aussie dollar and expect more weakness. Ideally this wave 3 will extend to 261.8% compared to wave 1 measured from a wave 2 high. On the 4-hour chart I'm tracking this incomplete impulsive decline within a red wave 3. This was our wave 1, wave 2, then another wave 1 and wave 2. This was a very nice 1-2-1-2 setup, and then of course sharp break to the downside occurred through this base channel again. So of course again I want to see in fourth wave pullback that this base channel will react as a resistance. Ideally we will see more upside price action in this 3-wave retracement. This, I believe it's wave A underway, and we will see then wave B pullback and wave C push higher back to parity. Okay, I think that parity is very strong psychological level here. So if we will get a nice 3 waves to the upside, then I think it will be a time to turn bearish again. At the same time, if we go to the back to this weekly chart, I will be tracking this trend line very closely, because wave 4 pullback, this broken trend line could become a very nice resistance area. Okay, also I want to discuss a little bit more about these corrective channels. Here I have this 4-hour chart, and actually I posted this chart a few weeks ago, and I called a bearish trend for the Aussie dollar as soon as I identified this 3-wave rise, okay, within 2 parallel trend lines. And when the market fell impulsively lower through this lower support line of this corrective channel, I was sure that this market will continue lower. Okay, and look how big drop in value of the Australian dollar followed over the last few weeks. So actually this is a very nice clean example for continuation within a larger downtrend. Okay, always when you're looking for setups, just try to identify the larger trend, then keep an eye on 3-wave retracement. And when you see a 3-wave retracement, you don't need to be very aggressive and look for shorts from a wave C peak. You can wait on a confirming price action. In our case, this was this impulsive sell-off. So as soon as the price reversed impulsively, this was confirmation that this market will continue lower. And now if we take a look also on this example of a little bit actually smaller price action, you can see that also this was a 3-wave retracement. Okay, yes, we have seen a little bit extension here, but when the price moved lower again in impulsive fashion through this trend line, then again this was very important breakout for further weakness. We can see a very similar price action here. This was only a 3-wave movement. You cannot count this as a 5-wave rally. And when this market turned bearish through this trend line, again this caused another sharp sell-off on Aussie dollar. So of course we will now anticipate and look for something similar in this upcoming wave 4. We will try to identify the 3-wave retracement, then we'll draw this trend line, and then when we will see an impulsive sell-off, this will be a trigger for a new weakness on Aussie dollar, which will ideally be our wave 5 sell-off. And now let's take a look also on the S&P 500. Actually, we will take a look at SPY because I don't have so much price data on this market, but this is actually the ETF that tracks the S&P 500, so actually structures are the same. If you recall, I was tracking this wave count for a long time. Actually, I was tracking this reversal triangle in wave 4. I thought this is a wave A, B, C, and then was looking higher for a wave D. Actually, we called this bullish run from here towards this trend line, but then of course I wanted to see how the price will respond at this trend line. Well, we can see that market actually did not reverse lower like I expected, but instead it break sharply to the upside. So I suspect that this market will continue higher, but more importantly, it's not important what I suspect, but what the market is actually doing. So I will again label the wave count so that fits best into the current wave structure. So if you see market rising, then of course you will, or you should, label the wave count so that you will stay with the trend. So of course I'm tracking this new wave count now. I label this as a completed free wave move, free retracement in wave 4, and now I think that new impulsive 5-wave rally is now underway from this low. This was actually an expanded flat formation in wave 4, and I think based on these time projections, this market has a lot of time and room to continue higher. Actually, this, if you take a look on these two legs, waves A and wave B, these two legs been unfolded for 7.8 years, almost full 8 years. Okay, so if again this 8-year cycle will prove correct in these two legs, because this was our first leg of this new 8-year cycle, and now we are in the second leg. Okay, so with these projections I came out with April in 2015, and then I have also here marked this bullish run for a wave B, which lasted 5 years. So from that point, if again market will remain in bullish mode for 5 years, we have time till April 2014. And with Fibonacci projections, as you know, when I identified end of a wave 4, I will typically look for a minimum direction in wave 5 for 161.8 extension measure from a wave 4. Okay, so this was our wave 4, and 161.8 projection from this move comes in at these levels. So this is a very nice region for projected region for coming months and years. Okay, so I will stick with the trend. I will look higher now on the S&P 500, but for the near term, maybe this uptrend will not just go straight up. As always, pullbacks will occur in any downtrend. In any uptrend you will see pullbacks. So I can here I can count 5 waves up from November lows, and we know that after every 5 waves correction will follow. So ideally we will see a retracement, ABC pullback back in wave 4, back to the area of a previous wave 4, which is right here. Okay, at the same time we can see that market is testing 161.8% extension of this wave 1 measured from this wave 2 low. So this is a very typical, actually the most important Fibonacci ratio for third waves. So we are definitely in the zone from where pullback could occur. However, I'm not saying that you should short this market, but if we will see an impulsive sell-off, then of course this should be very important signs that there will be better times to look again for longs on stocks, of course after a free wave retracement. Okay traders, that's it for today, and I will catch you tomorrow with new updates. Have a good day.